And we're live today on Energy Superheroes. We have Ali Jamal. He's an angel investor. He's been doing it for 10 years. He's got an angel syndicate on Angel List, and he's calling in today from Puerto Rico. He's done more than 120 deals with more than 4,000 LPs. That works out to a deal a week, which is just crazy. They do about 250,000 a deal and have deployed more than $25 million in capital. That's a really active angel syndicate. So we're going to talk all about angel investing today, what's exciting out there today, and maybe what's a challenge. We're really happy to have you on the podcast. Welcome, Ollie.
Thanks, Peter. Really great to be here.
Ollie, you're doing something that so many people want to do, but have not been able to execute on. How did you become an angel?
So I started my angel career, I think what the way a lot of people do, which is sort of by accident. I had some friends that had startups and I was working a more corporate type job at the time and had money coming in, but I wasn't necessarily following my passions as much. And so when they asked, was definitely offering help and advice, but then also wanted to back them a little bit financially. So wrote some small initial checks in some friends' startups, and then it just grew from there.
And that was super cool. How long ago did you very first get into it?
It's probably been about 10 years.
That's cool, man. So your friends' startups, that's risky. Everybody says don't invest with your friends. How did those early ones work
A
out?
couple of them did okay. Like we got our money back, and then I think on one or two of them we lost, and then one or two we had slight up rounds. It wasn't anything crazy, but I at least got my feet wet a little bit. And then I had a friend who had started an angel syndicate. I started investing with him and his syndicate. And that's where I really started to see the potential and just seeing some really great deals and really learning more and more about what makes a great angel investment and refining my own views on the world and technology and venture.
No, very good. So that's a great question. Lead in. What makes a great angel investment in your mind?
So it depends on what your strategy is. For me personally, I think a lot of angels are coming in and writing pretty small checks, 1,000, a couple thousand, 5,000, in which case you're really looking for those things that could be not just home runs, but grand slams. The name of my syndicate is called First Check Ventures because I think the best way to get a grand slam is by being first. I'm not looking for a 5X or 10X return. I'm really searching for those things that could give you 100X, 200X, 500X return. Then those are obviously not going to happen every deal. And so there's also a higher strikeout rate to keep with the baseball analogy. When you have that grand slam, it's worth 20 singles, right? Or something. So like figuring out the right mix of how to do it. Things I really look for are things that are very early that have a huge potential and where when it does hit, it could be something really big.
No, that's awesome. And you go across industry, or do you like to focus on one industry or the other?
I tend to go across industry, but be specific in what I'm looking for, which is I tend to look for things that everyday people will use and everyday businesses will use. So it's much more towards kind of the base of the pyramid. And I particularly tend to look a lot at emerging markets because I feel like most venture capitalists and most technology companies ignore what's happening in these different markets, but there's huge potential and huge number of people that are just not being served.
Yeah, I think that's really a great point. Right now, I love emerging markets too. What are some of the emerging markets that you think are going to be, let's say, exciting over the next 5 or 10 years?
A big focus,
No worries, man. Take your time.
a big focus for me has really been buying these places with a large population that are on the cusp of something big. So I spent a lot of time in Southeast Asia and a lot of time in Latin America. So those tend to be the biggest markets that I look for and that I understand the most. I think Brazil and Mexico are both huge markets in Latin America that are ignored by a lot of traditional venture capitalists and just have huge populations. They're making good salaries, same GDP per capita as what in China and Latin America as a whole, right? It has 700 million people with relatively the same GDP per capita as China. So you're talking about an opportunity that's half the size of China, right? Two or three times the size of what the India opportunity is. but with one tenth the number of venture capitalists as China and probably one fifth the number of venture capitalists as India. And so I just think there's this huge opportunity to come in and enable a lot of these markets and help them grow.
I think that's a great point. And Latin America is in our own backyard, which makes a ton of sense. And I think it's easy to travel in Latin America. And I think there's a lot of shared values, let's say, between North America and Latin America. So I think for all those reasons, it certainly makes a ton of sense. I haven't personally been to Brazil yet, but I have been to Mexico a number of times. Let's talk about Mexico. Can you talk about any investments that you've done down there?
Yeah, I've made several in Mexico, in Brazil, in Colombia. It's really about finding these things that kind of already exist, or at least for me, it's about finding these things that already exist in the US, but for some reason just start missing Mexico, in Brazil, in Latin America. One example of that is I invested in a company called Credi, Kredi. And what they do is they are a marketplace for mortgages. So if you're in the US and want to buy a house, you can go online, you put in some info onto Rocket Mortgage, and 10 minutes later, you have 20 different quotes from different mortgage brokers who are try to give you the best deal. When you're in Latin America, if you want to get a mortgage, you get 200 pages notarized and authorized and verified. You go, you take it to a bank, you sit there for 12 hours a day for 3, 4 days in a row until you finally come out with a quote that's good for a week, right? And you can't even really shop it around. So what Credi is doing is basically taking that same model of Rocket Mortgage and going directly to the banks, connected to their APIs, and being able to provide individuals with different mortgage quotes so they don't have to go and spend all this time and then waste all this energy trying to get a mortgage quote.
Yeah, no, it makes a lot of sense. My fiance is from Ecuador, so I get that. When we go down there and she has to do something administrative, she's okay. I'm going to go to the city office. I'm going to wait in line for the next several hours and come back. She can't do anything on the computer or on the phone. There's no app for it. There's no app for that. You have to go down there and just put up with. But yeah, the people. What's amazing too is an example. A lot of her friends will call her and ask her to buy stuff for them on Amazon. It's cheaper for them to go on Amazon, have her go on Amazon, buy the product, and then ship it to them than it is for them to just do it themselves for whatever reason. So there are a lot of inefficiencies. And what's amazing is in like the late 90s, you didn't really know in the US market, you didn't know what markets would even succeed. Like it was the guessing game. So now it's like you've got this blueprint where you can say, okay, this works in the US, probably going to work in Latin America. It just hasn't come yet.
Exactly. Exactly. And especially things that are around kind of finance, credit, debt, banking services, all these things that we take for granted. Latin America just, in a lot of cases, doesn't have access to yet. 50% of the population is still unbanked. 90% of the population still doesn't have access to credit or debt. So if you want to buy a house, get an apartment, buy a car, all these things are just much more challenging in these markets.
Yeah, it makes a lot of sense. And you've got a rapidly growing middle class in Latin America, population with strong work ethic, values that I think are some of the same values that made our country successful, which we get into a whole discussion whether we still have those values anymore, but they definitely have them in Latin America. And it's really a great point about it being a good market. Tell me about another deal. Pick out another deal. Could be from Latin America or whatever that you think is a great case study. It was a successful deal, and then we'll talk about one that maybe you wish you hadn't pulled the trigger on.
Sure, sure. One that there was another was actually probably my first deal. My first deal was in a startup called Yummy, which is a grocery food delivery app initially based in Venezuela. And the fact that it was based in Venezuela, I think, scared off a lot of initial investors. But Venezuela is a huge economy that historically had one of the highest GDP per capita. And the thing that was unique, they were doing everything with the Delaware C Corp, and everything was being transacted in US dollars. Venezuela is actually basically transitioned to a dollarized economy. And so there really isn't much currency risk. There isn't really that much government risk because everything was already organized in the US. But a lot of people were initially scared. And there wasn't really any competition for these apps like there was in the US, where you have Postmates and DoorDash and Uber Eats and Grubhub and Seamless. They were the only ones. And so they were able to have a first mover advantage and really start to add a lot of services. So they expanded out from just food delivery, then to grocery delivery, then to pharmacy delivery. Now they're doing ride hailing. They've really been able to expand out what they're doing pretty rapidly and offer more and more services, again, to this bottom of the pyramid everyday people, which I think is extremely important.
Yeah, it makes a lot of sense. And how are they able to overcome the geopolitical challenges of Venezuela? On the news all the time, all these this hardship down there. I haven't been. I imagine some of it may be sensationalized, but probably some of it's true. How were they able to overcome that?
But just like everything else, right? I think it's a lot of it's by area and by neighborhood. So you're focusing on the neighborhoods that are safest, where you know there's not as much crime. Again, like they made adaptations to it. So unlike traditional delivery guys where they're handling a lot of cash and a lot of other benefits, you're doing everything electronically online. And so there's no real point for somebody to go and try to hold up the delivery guy if he doesn't have any cash to give you. So just things of that nature where it makes it easier to transact, I think could have a huge difference. And a lot of Venezuelans actually have money either in euros or US dollars held outside of Venezuela from back in the Chavez days. And so this is just one way for them to actually utilize the cash they already have sitting around.
It makes a ton of sense. They have the money, they have the bank accounts, keep it electronic, but then give them a way to benefit from it on a day-to-day basis, as opposed to having to wait and use it sometime in the future.
Exactly.
Cool. That sounds like a great deal. Was that how long ago did you make that investment? And what is like exit look for these kind of deals in the hold period? You have to hold them for 5, 10 years, or what is usually the hold period?
Yeah. So we initially invested in September of 2020. They later on got accepted into the summer 2021 batch for Y Combinator. They came out of that with a very strong round led by a large US investor, and they have continued to progress quite substantially since then. The exit opportunities are still going to be several kind of years away. Most of these are probably going to be at least 5 to 10 years. There is opportunities potentially for somebody to acquire them that's also in the delivery grocery super app space, or potentially get bought a private equity company trying to do some sort of roll up of these sort of things. Or there's always the chance that they go public. Those kind of tend to be the major kind of exit opportunities for these sorts of companies. So it's either an M&A to a strategic, an M&A to a financial sponsor, or an IPO.
No, very good. And yeah, I hear you on your philosophy of first check. So were you the first check in that deal?
Yep. Or we were the first significant check. I think there might have been a couple of people that were writing 5K, 10K checks. We were able to come in with a larger, more substantial check and really help provide them with enough runway to prove out the model a bit more.
I bet it helped them. And I think that's one of the things that's very cool is that you're coming into these deals when people actually need it. Whereas I get it being on the investment banking side, we can only look at a deal of a certain size and there's a lot of hurdles and companies have to have already achieved a lot of they've already had to have overcome so many things before that they can qualify for some of these bigger institutional but having been an entrepreneur, the hardest part is in the early days and nobody wants to talk to you then. So I think you are facilitating a service that a lot of entrepreneurs really need.
Yeah, I think because one, nobody else really wants to talk to these people, and I'm talking to them, I can learn a lot more. I can get access. I can have influence. And the thing is that I don't have $1 billion funds behind me, right? So I can't write $100 million check or something like that. I'll be writing 100, 200, 300K checks. And so if you're going to be writing 100, 200, 300K check, I think it makes much more sense if that actually means something to the people, right? Like when you're at a Series B or Series C and you're raising $30 million, $50 million, nobody cares about $300,000, right? That's the easiest one to squeeze out. That's the easiest one to ignore. And it's the ones where you can't really have any influence, right? If I invested in the public markets and I put $100,000 into Meta, Zuckerberg's not taking my call, but the founders of these companies are taking your call, they're taking your advice, and they're coming to you for advice. And so you can actually influence them and have a real impact, which I think to me is one of the most exciting parts about me.
Yeah, you get to have that impact and you're able to do it across a bunch of companies. Whereas if you were running day to day operations, you can't really do that. You're locked into one company, but
Exactly.
kind of the best of both worlds between an investor and entrepreneur.
Yeah, that's exactly right. Like I feel like if I was the founder of a company, I could dedicate myself to solving one problem and maybe I can make an impact on people's lives. This way we can back 100 companies and 100 different solutions. And I hope all of them end up working out. But even if just 30, 40% of them work out, that's 30 or 40 different problems that we solve instead of just one. So I think it's a much greater impact and much better use of my time.
No, super cool. So a good question that came to mind is you're coming in early and you guys are the angel round, and I'm sure you have certain terms and conditions. How do you protect yourselves from getting diluted in later rounds as these guys continue to grow, maybe bring in an institutional VC who I've seen institutional term VC term sheets. They obviously are very advantageous to the institutional investor. How do you protect yourself from the later rounds?
So there's a couple of things that we tend to do. One is that we usually negotiate for pro rata, so we can usually keep our ownership stake. The other, basically, that we're coming in early and making these bets early enough that we expect a certain amount of dilution. Probably won't exit with the same percentage of ownership as we started, but you can factor that into your overall math and overall equation. And so, even though you're going to be diluted by 30, 40%, you can model that into what your exit opportunities look like, and the math and the risk could still make sense.
Yeah, that makes a ton of sense, Ollie. And what do you look for in the teams? Like, sure, the team and or the founder, they may not even have a fully built out team, but the founder or that key guy or one or two people has to be huge at these early stage deals.
Yeah. So for me, a lot of it is how they approach what they're doing, how they think through it, how do they incorporate data or analysis, how greedy are they, how bootstrap can they be? Like, I'll get a lot of people who will come to me and, oh, I have a cool idea. I need $5 million. You just, no, you really don't need $5 million. There are very few things that are software related these days where you need $5 million to prove it out, right? Like you can bootstrap a prototype for 10 grand or 20 grand. And if you've got that MVP launched and you're getting some initial customers, initial traction, right? Like I want people who are approaching it from a scarcity mindset, who know how to stretch a dollar, because those are the kinds of companies, especially in this environment, that are going to last and going to survive. Thinking about people that know how to execute, who have a big vision, but also who understand what they're doing and how to make the most out of what they're doing is really important.
Yeah, definitely know how to stretch the dollar. Don't waste money. Does it tend to be younger founders, older founders, or a little bit of both that you tend to back?
It probably tends to be a bit younger founders. I like people to have some experience, but I feel like if you've been in the corporate environment for quite a while, it's hard to break out or to adapt to a startup environment. So most of the founders I think that we are backing have maybe done a couple years of a more corporate lifestyle and then 5, 10 years of a startup lifestyle and then are going out and doing their own startup. That's not the only playbook that works. And we've invested in some older founders. It's really young founders for the most part, having enough experience to know how to build and execute, but not so much experience that you're just trapped in the way things were done.
Yeah, I agree with that. When you're young, you tend to see things differently, see what's possible, and don't get too bogged down in being too much perfectionism. Everything has to be perfect, and I have to have this, I have to have that. Most of the stuff you think you need to have, you don't actually really need. You just need the product and you need customers. I'll ask you this. So, since you do software, I think one of the biggest challenges is always getting over the hump of having enough customers, like having that network effect. Okay, these days, like you say, you can get an app built, you can get a prototype done. There's a million of them out there. But how do you get from 10 customers that you ran around and signed up yourself to get to scale? How do you see guys being able to get to that critical mass of customers where it's enough that they like to use the app, the delivery app? You've got to have enough businesses on the app. You've got to have enough customers on the app. And it's like this network effects thing. Until you get to that point, you're like nobody. How do you get past that hurdle?
A lot of it has to do with kind of hyper focusing. So either hyper focusing on your customer and target customer, and then also, oftentimes people are doing it geographically. So again, like instead of doing all of Venezuela right away or all of Mexico right away, you focus on a specific city, like Mexico City. You might just focus on a specific neighborhood. Like, all right, we're gonna have 80% coverage in this neighborhood, and the rest are gonna be zero. And then once we have enough customers and enough traction, enough people, we'll open up wait lists in these other neighborhoods. And then we know that there's already enough traction and enough people that are excited about what we're doing. And now we can launch our second region, our third region. And depending on the service that you're offering and how quickly it's finding people, it can really scale pretty quickly and you can make these leaps pretty fast. And now again, those are more the ones where it has a, you know, physical component to it, right? There's a lot of startups where it's a online website. And so maybe it's just around how do we perfect our growth marketing plan? How do we make sure that our LTV and our CAC makes sense? How do we open up more marketing channels and the right marketing channels? And how do we divide our advertising budget? So it really depends on the business and what critical mass is and all the different ways that people learn about, start to explore your product and making sure that you're understanding each of those paths and the best way to get in front of it.
Yeah, that absolutely makes sense. If you think about like Facebook, they start off with Harvard. They didn't try to do every single university. So people don't know why it's called Facebook. It's because in the old days you got the Facebook when you got to the school. And
Yeah.
they're like, oh, so wouldn't it be cool if we just put this online? And they just did it at Harvard. Then they moved into other Ivy League schools, then other schools, then they opened to the general public. It's like what you say about niche focus on one neighborhood, get that down, and then move on from there.
Yeah, exactly. And it was just colleges at the beginning, right? And then they opened it up to high schools and they opened it up to adults. So there's kind of network effects happen sort of this viral type way, but a lot of it happens within specific pockets. And so understanding which pocket to tap into and how to get your kind of power users in there to spread it across the wider region.
Yeah, totally makes sense. Where do you see yourself going from here as far as do you want to just stay with the Angel Syndicate and continue to do more deals? Or do you see yourself raising a fund, a venture fund, and maybe going for some later stage stuff? What's your next plan?
I really like the early stage deals. I'm actually thinking if I was to do anything, it would probably be to raise a venture fund to do earlier stage deals. I think sometimes it's harder to get people excited about early stage deals because there's not as much there. And so it's easier to get people excited when you have big name VC coming into the round and it's $1 billion company that's going to IPO in 3 years. It's much harder when it's okay, we're the first check and we've got 10 years before anything comes back. So I think if anything, I would institutions, family offices, these kind of larger typical VC investors are the ones that actually operate more on a 10-year horizon. And it might be to raise more of an institutional fund to focus on these first checks. But I really aspect of having a syndicate and being able to get more everyday people involved. And I think it actually does have a large benefit, not just to these investors to getting into stuff very early, but also to the companies, right? To create your own family, right? To create your own village that's out there supporting you, I think is really important. And we have several thousand LPs of the syndicate from all walks of life, former founders, product managers at major companies, engineers, doctors, lawyers, your current small business owners. And all these people are people that can look at what you're doing, invest in what you're doing, support you, and then help you, right? When the time comes when you need to get advice or get additional information or support, you now have a much larger network to tap into, which I think is really exciting.
No, that is very exciting. Yeah, you typically can't have that kind of relationship either with LPs when you have to deal with a venture fund because you're dealing with it's usually financial professionals dealing with other financial professionals at the LPs, and they're a couple layers removed from, like you say, founders or people from corporate decision makers that actually execute. So it's nice that you have that direct channel to people that know how to execute because that's only going to help the companies.
Exactly. Exactly. There's a lot of people that have already done it before, and they're oftentimes willing to help, especially if they have their own money involved. It makes it that much easier to get additional support.
Oh, cool. And do you see the LP base just continue to grow now the longer you're on the angel list?
Yeah, we have several thousand LPs, but the requirements are really just being an accredited investor. And there are a lot more people that are accredited investors that are on these platforms that are actively investing right now. So I think there's actually a large number of people that could join. One of the things that's interesting is I initially reached out to a lot of my own friends and my own family, and a lot of them hadn't heard about this. And so they didn't know that there was this opportunity to go and invest in early stage startups and to invest alongside trusted angels who've actually been there and done it, but they can get their money right along with it. And I'm not the only one on the platform. A lot of them ended up finding other investors or other angel syndicates, other companies they liked, and they started to evolve their thesis as well. I think the more people we have out there thinking about what kind of things do I want to put my money into, what kind of companies do I want to see in this world, I think the better off we're going to be. I have a specific vision of what I want to see, things that I think we can work on and impact. But that's not the same thing as other people. And so if you're really excited about climate change and being able to make an impact there, you can put all your money towards that. If you're really excited about the future of biotechnology and potentially how cure all these horrible diseases, you can put your money towards that, right? And it's really a chance to let your wallet and your investments reflect your values in a way that I don't know if you really get as much these days in public markets or putting in mutual funds. And don't get me wrong, I think that you should still have some of your money in these other things with extra money that you have that you're thinking about what do I want to put my money into? What things do I want to support? What things do I actually want to see exist in this world? I think angel investing is a great way to make those things happen.
Yeah, I would agree with you. I mean, it's the tech is amazing with AngelList. I know that it gives you could probably get into the details of it, but it makes it easier to manage a fund, whereas you wouldn't have been able to do that 20, 30 years ago.
Yeah. So Angels is basically created or a platform that has more or less automated the SPV process. The SPV process is a special purpose vehicle. And so what that means is that individuals can invest as little as $1,000 and it rolls this all up into one investment vehicle. And then one investment vehicle is what actually invests into these startups. So what that means is that we get 100 people, 200 people writing 1,000, 2,000, $5,000 checks, and all of a sudden we can make a meaningful difference to these entrepreneurs. And unlike having to go out and talk to each of these individual companies by yourself, trying to figure out which ones are going to work, which ones aren't, going and writing a check and trying to get onto the cap table for a 1K check, this is a way that kind of automates that whole process. And you have a syndicate lead who's investing their own money as well and sharing the deal with the people that they know and they trust and getting their support into it. So I think it really is a great way to one, just get more exposure to startups in general, but two, really invest in what you want the world to look like.
Yeah, absolutely. And how do you get the deal flow? Does it all come through AngelList or do people come to you on LinkedIn? How do people find you?
Yeah, so people find me all over the place. People find me on Twitter. People message me on LinkedIn. We have a submission form on our website, firstcheckventures.com. A lot of deals come from other venture capitalists. I talk to the other VC firms. They talk to me. They send me the stuff that's too early for them. I send them the stuff in my portfolio that's now raising a later round. I now have several hundred founders, the founders, the co-founders of these startups. They get approached for angel investment from their friends, from their network. So then they send me the stuff that they're looking at. These 4,000 LPs in the syndicate will send me stuff that they're seeing from their network. And so on any given week, I'm looking at 300-ish companies. And on average, I'm probably talking about 50 to 60 of them each week. So I'm trying to get out there in front of as many as possible. And especially because these are the companies that are getting ignored by everybody else. And trying to find these diamonds in the rough is takes some work and takes some legwork, and I don't think it's just going to fall into your lap. So I'm out there hustling, trying to find them.
It's unbelievable. You must have as much deal flow as anybody. 300 companies a week, talking to 50 is crazy. That's a lot of deal flow. Just to be able to keep it all straight, man, coming from the side of the table as an entrepreneur, I didn't appreciate it to the degree once you become an investment professional, how many deals. And it's like just to try to differentiate one from another, you really have to be a focused individual because if you're not, like they just all start to run together.
There's also like several really common problems that everybody's trying to solve, and really having a unique argument about why your solution is really going to work for this, and understanding who else is in the space and why they're in the space and why you're better than them. That's really interesting, right? Because I had so many people who just think they're the first ones to come up with this idea. And I'm like, I saw this 3 times last week. This isn't unique. Like, it's just, that's when having that bootstrap mentality, showing that you have the traction, showing that you have the customer base that's growing, that's when all that stuff really starts to have a big impact.
Yeah, it's critical that founders do their diligence on the competition because you should know the competition and you should know your own market better than anybody because you're in the markets. If an angel investor or an angel syndicate or somebody like yourself who's leading a syndicate knows the market better than them, that's a problem.
Exactly.
So, what do you see as the big next things that people aren't paying attention to yet? Like everybody would have loved to have said, okay, social media in 2003 is the thing, as opposed to saying it in 2010 when he missed the boat already. What are some of the big things, big trends that you're looking at over the next 10 years?
I'm probably uh, a bit of a weird person in that sense that I don't want to try to predict the future. Like, I don't really want to think about what's going to happen. There's so many things that are just happening so fast, and I have no clue what's actually going to work or what's not going to work. How we're going to use generative AI or all these sorts of things that are super buzzwords now. Crypto and NFTs last year, right? Every year we have some new hype thing. What I want to focus on is, you know, 95%, 98% of the population is ignored by the everyday big tech companies, giving them access to capital, like ways to make their lives easier, ways to create a small business, manage their inventory, manage their taxes, manage their payroll, get access to salary earlier. These kind of everyday things that are just needed. And very few people are doing that right now in Latin America. Very few people are doing that right now in Africa. Who's offering car loans or motorcycle loans to everyday people in Nigeria right now? And finding the entrepreneurs that are going to go and do those sorts of things and enable people to make something of themselves, right? Build their own lives, build their own happiness, create their own destiny, right? Like, we call it the American dream, but why isn't it the global dream, right? Owning your own house, having your own family, building a future, not having to worry about working until you die because you don't have any retirement savings. Like, if you're on banks, what are your retirement savings? You're just relying on your kids. So, when I want to invest in over the next 10 years is the stuff we talked about, right? We saw the middle class double in the last 20 years in Latin. Who's enabling those people, right? Poverty's been cut in half, but it's still there. How do we get more and more people access to education, especially now when so many things are available online? How do we make it in a way that is easier and better for people to understand? How do we distribute work in a way that can build up these other economies and keep things moving? Right. To me, that's what's most exciting.
No, it's huge. And you mentioned Africa as well as another area that's definitely ignored. And as you mentioned in the beginning, people are very focused on China and India, not paying enough attention to Latin America and certainly not Africa.
Yeah. And even Eastern Europe, there's huge differences, like in how many VCs in Eastern Europe, in Pakistan, in the Middle East, in Africa versus what in Silicon Valley, right? Not everything happens in Silicon Valley, and not everything in Silicon Valley is useful to the rest of the world. And so I'd much rather focus on the things that are actually going to make a difference in people's lives. I don't know how many burger robots we need or how many delivery robots we need. Self-driving cars are great, but I don't know. I just think I would rather focus on everyday problems and make everyday people's lives 20% better.
That's a huge goal because you're not only making a difference in the companies, but the companies are making a difference in people's actual lives, like day to day in a way that matters.
Yeah. And it's not even just their customers, but even now we've helped these companies have grown. They have hundreds, some even have thousands of employees, right? So with our first checks, we're really having an impact in the economy of these places in a really meaningful way.
No, that's very cool. So, Ali, I think we're getting close to time here, but I feel like I could probably talk to you for another hour or two, but it's been really a pleasure having you. Is there anything I should ask you about that I didn't ask you about that you'd like to get out to the audience? I know you're on LinkedIn. What is that the best way for people to get in touch with you? And what would you like to say to the audience before we go?
Yeah, LinkedIn is probably the best way to get in touch with me. I'm always looking for great entrepreneurs who are trying to make a difference in this. Like I said, I'm looking at 300 decks a week. So I do my best to try to get back to as many of them as possible. I can't always respond, but I do my best. And on the other side, always looking for people who want to invest in great startups who have a vision to not just make money, but make money while having an impact. And I think that we can do both. And I'm really excited about that. So anybody else who's excited by that opportunity would love to be connected to you as well.
No, awesome. And is that firstcheckventures.com? Is that your website?
Yes, it is.
No, very good. Ali, this has been really a pleasure having you. I think what you're doing is super exciting. I'd like to have you back on in a couple of years and check in because I expect you to continue to grow tremendously. I think you're filling a huge gap in the marketplace, which is amazing. Awesome. This has been Ali Jamal. Make sure you look him up on firstcheckventures.com, also LinkedIn. And if you're interested in, if you're a company that's looking for their first check, I don't know too many other sources that get it the way that Ali gets it. It is a market that's definitely underserved. And if you're an investor that wants to participate, reach out. And full disclaimer, there's no investment advice. But bottom line is, if you're a sophisticated investor, reach out to Ali and check it out. Appreciate it, Ali. Thank you.
Yeah, thanks for having me.